All right, welcome to today's Explainer. We're doing a deep dive right into the neon-lit high-speed grid of Web3 economics. If you've been following the space, you know it's constantly shifting. But today, we are breaking down a treasury strategy that honestly feels like a true cyberpunk-style paradigm shift in how digital assets are actually managed. We're looking at a system that completely rewrites the rules of supply, demand, and foundational value in the decentralized space. It's a pretty fascinating approach.
So let's just get right into it. Enter InterLink. As you'll see, this isn't just another random project launching out into the digital ether with, a shiny white paper or a new Discord server and a bunch of empty promises. They're actually attempting to redefine value itself. They've pinpointed what they see as a fatal flaw in the whole architecture of modern tokenomics. And recently, the board of InterLink Labs got official approval from the InterLink Foundation to do something that is, quite frankly, entirely unprecedented in the space. But before we reveal their actual solution, we really need to look at the problem they're trying to solve. I want you to consider a pretty provocative question here. Is the standard Web3 playbook fundamentally broken? Think about it. In the fast-evolving world of blockchain, most ecosystems follow a really familiar, almost predictable path. But as we're going to see in this explainer, that path is riddled with systemic bugs that actively prevent projects from maturing into real, sustainable economic engines. Section 1. The flawed Web3 playbook. The cycle of endless dilution.
So let's break down the old Web3 playbook versus InterLink's path. The frustrating reality of traditional crypto, right, is this cycle of minting tokens endlessly, aggressively distributing them out to the market, and then just kind of crossing your fingers and hoping that demand eventually catches up. And honestly, it's a recipe for chronic selling pressure and these crazy short-term hype cycles that end up looking like a massive roller coaster on the charts. InterLink, on the other hand, completely rejects this idea of treating their native token, ITL, as just mere marketing fuel. Instead of relying on indefinite airdrops to buy attention, they're shifting gears to strategic asset management. They're actually treating their token with the strict capital discipline you'd expect from a traditional financial institution, all to generate real, sustainable buying demand. Section 2. The reverse auction reveal. Flipping the script. So, how exactly do they generate this sustainable demand? Well, in a normal, traditional auction, you have buyers competing by bidding prices up, right? But here, the dynamic entirely flips. Think of it kind of like independent contractors bidding for a government job. In a reverse auction, sellers actually compete by offering the most attractive prices to a single buyer. And in this case, that buyer is InterLink Labs. Now, you might be thinking this is just a buyback, but it's not some easily gamed open market buyback that just creates artificial, chaotic volatility. Not at all. It's a completely transparent, community-driven process specifically designed for finding actual fair value. The actual mechanics of this reverse auction are beautifully simple and totally transparent. Step 1, you just submit the amount of ITL that you wish to sell. And step 2, you submit the exact price that you are willing to sell it for. That's really it. InterLink Labs then reviews all these offers and uses its own treasury capital to repurchase selected tokens directly from the market. So the absolute crucial point here, and I can't stress this enough, is that participation is 100% voluntary. Literally no one is ever forced to sell their position. Every single holder retains total and absolute control over their own assets at all times. Section 3. Redefining the treasury asset. What happens next? So what actually happens to that repurchased ITL once InterLink Labs buys it back? That's the big question. Well, the old industry question used to be, how much can we distribute today to get attention? But the new question InterLink is asking is, how much can we responsibly bring back into the treasury to build long-term value? Those repurchased tokens follow 3 distinct paths that are shaped entirely by governance. First, there's a permanent burn, which obviously increases long-term scarcity by permanently removing tokens from circulation. Second, there's redistribution, which strategically rewards genuine builders and real community contributors who are actually adding value. Or third, a hybrid approach, which balances that scarcity with highly targeted ecosystem incentives. It's a super dynamic system, and the whole point is that it supports the grid rather than just draining it dry. I actually want to pause here for a second and let this specific quote really sink in. The best way to demonstrate confidence in an asset is not to distribute it, but to acquire it. Think about what that actually means. When InterLink Labs deploys its own hard-earned treasury capital to go out and buy back ITL, it sends a massive, undeniable signal to the open market. Actions speak significantly louder than just publishing another roadmap. Section 4. Earning the right. Ecosystem architecture.
And this brilliantly illustrates how this mechanism completely transforms standard Web3 operations through a really crucial separation of powers. On one side, you've got the InterLink Foundation, which basically acts as the shield. They are hyper-focused on governance, protocol integrity, and protecting the long-term interests of the network. Then, on the other side, InterLink Labs is the engine. They are the ones tasked with building the actual products, generating real revenue, and actively managing their own treasury. This division is absolutely vital because it ensures the foundation doesn't just act as some unlimited token faucet for the labs. These organizations actually have to manage their own budgets responsibly.
This entire reverse auction strategy doesn't just exist in a vacuum. It's deeply rooted in InterLink's uncompromising foundational principles. And notice what they don't do. There are absolutely no ICOs, no IDOs, and no private token sales. Historically, their community rewards have been funded with real company treasury assets like USDT and USDC. They demand that their organizations achieve true financial independence. It's a way of proving that sustainable growth requires real economic activity and actual verifiable revenue. They have literally been playing the long game from day one.
Which leaves us with a really powerful final thought to wrap up this explainer. The future of ITL isn't about how much is given away. It's about how much is earned back. In a space that has been so obsessed with endless dilution and giving away free allocations, InterLink is really trying to prove that true growth requires real economic activity. So I want to leave you with this question to chew on. If a project doesn't have the real underlying revenue to buy back its own token, what exactly is powering their grid?